All right, so we had yesterday's CPI data coming out, which was good news, but the market faded that, and that's just a sign of the times, right? That's giving you some very valuable information, showing you exactly what is the market's attitude right now, which is it's bearish, right? It's still bearish. So I really encourage people not to get too excited with any of the pumps that you do see within the market. Wait for some key levels to be reclaimed. In today's show, we'll talk about what levels I'd be looking at specifically for some of the top altcoins, the likes of Ethereum, Solana, Sui. We can look at some of the meme coins as well. If you guys still have any interest in that, you can see, of course, Pepe up at 12%. But again, be very careful with any of these pumps. So smash the like button, hit the bell notification, and subscribe to the channel. Let's get immediately straight into it. And as I mentioned, you do have the CPI data. You can see it came out better than expected. Year-on-year inflation, 2.9% was the expectation. Previous was 3%, so it dropped by 0.2. Came in at 2.8, showing you that inflation is coming down, right? Which means that they don't have to be so aggressive at the Fed. And that means that at least the forward outlook would be that maybe the Fed will start to cut interest rates quicker and quicker, and we can end quantitative tightening, which is absolutely destroying the markets, alongside, of course, Trump and his tariff wars, right? So it is what it is, right? At the end of the day, we got to stick to the trend. The trend's your friend till the end of that trend, and the trends are down, right? Absolutely 100%. Don't let anyone else tell you anything otherwise. The trends are definitely down. Anything from a weekly and below is a downtrend, right? So we will see how that lines up with the monthlies and things like that. Of course, you could still put in macro high lows. But let's get into it. Right? So let's have a look at the stock market. Even the stock market has broken structure. We covered this a whole lot. We spoke about any sharp reaction towards the upside. You'll be looking for resistance. Let's just quickly make an adjustment over here, because we do need to adjust these every day ever so slightly. So you're going to be looking at, first area of interest, 5,800 for the S&P 500 is going to be a significant zone, and you're not getting that V-shaped recovery, at least right now. This has been one of the biggest sell-offs. Major support. We can adjust this ever so slightly as well, 6.24% away. Whether you get a bounce before hitting that level, that I'm not sure of. It would be pretty brutal if it just bled straight through into there without any bounces. So I definitely don't rule out the bounces, and that's what we spoke about yesterday. If we do see a move from the equity markets, which is entirely possible, very likely actually, to set in that lower high, that is going to lead to huge moves within crypto, right? Big moves. For those of you caught in positions, I'll show you the levels where you would be at least well positioned, where you could offload some of those trades. And then we can reassess, right? If it breaks through and takes out the highs, of course, then we have a different picture on our hands, and you can call it a big shakeout. So that is the S&P 500 futures. We'll quickly have a look at the rest of the stocks over here. We are trading these things, by the way, actively each and every single day in the Whale Room Discord. For those of you that are in there, please make sure you check out the brand new trader who's been crushing it in there, Wall Street Singh, right? Go and have a look at his channel over there, because he is a full-time equity trader trading the low time frame. So QQQ as well, not too much of a bounce there, still looking pretty bad. Dow Jones still looking bad. Nvidia put in its little bounce. I am expecting that this is going to meet underside resistance over here, anywhere around about 127, and it's probably going to lead into a lower high. So a lot of work to do to reverse that trend. I would expect that MicroStrategy probably wouldn't be any different. It is holding still the 200-day moving average over there, but let's give it a little bit more time. I don't expect any V-shapes in the best case scenario for the bulls. They would establish a trading range over here between 235 and up to about 309. But this is going to be major resistance. If you are in MicroStrategy, this is going to be super underside resistance over here from let's just quickly straighten that one sec, guys, from 288 over here and up to about, there we go. So between that 288 and 308, that's going to be a big level to reclaim. This is the equivalent of Bitcoin getting back above the breakdown level, which is $93,000, right? Coinbase, let's have a look at that one quickly. Just let it refresh. There we go. Coinbase already breached that. So it's given up all of the gains from when Trump came in, similar to the stock market that led to the big move up. It has breached that, taking out that major pivot point over there. So bearish over there as well. Tesla, of course, put in a bit of a bounce, but it's still got a lot of work to do. And this is going to be major underside resistance over here for Tesla. That is going to be between 310 and up to this 325, right? So any bounces into this region that lead into a lower high, expect that you are going to be going lower. How low could you go? I mean, you've started to fill a lot of the gaps. There's been CME gaps all over the place over here. So there's one gap over there, theoretically filled, but you still have another gap over here in the gray box. If that does lead into a lower high like that and down, then you're talking about 155. So you do have to take all these things very, very seriously, because when the stock markets have broken structure in the past, they did lead into a multi-month downtrend, right? And that's ultimately the expectation of what could happen. You have now Apple also starting to break down. So all fun and games in the stock market, one of the biggest stocks as well in terms of market cap, taking out that level. It is in a downtrend, lower lows and lower highs. Next bounce over here, lower high. So I know some of you say, you're scared, right? Bros, I'm scared. Bro Safina, you don't need to fear when dupes is near. I would wait for the bounce, right? All you need to do is wait for any bounce that occurs over here. There will always be bounces. When there's a bounce, that's where you can offload. You'll offload at a very similar place to probably where I offloaded, which is 92 to 93,000 before the breakdown. The only difference is that I'm in a full cash position now. So I have the opportunity where I can jump in some of these low levels, catch the bounce, make 50% probably on the way up, and then exit that position once again. So the only difference is you probably, if you're fully invested, you can't take that move up, right? You can't play the bounce into the lower high. But what you can do is you can still offload up here, which means it depends what coins you're in. I mean, it would mean your total portfolio from all-time high to the point at which you exit might be, 30 to 50% drawdown, assuming you were in profits as well. Therefore, you're just giving up some of your profits. Okay, so that's that over there. If you, again, reminder, if you do jump into Whale Room, these are the trades that have been taken, right? We're doing this every single day. This is with, again, Wall Street Sing over here. And if you zoom in, I mean, this is $2,500 profit a day. We're doing this on the daily. So don't fear, right? Don't fear if crypto is going down. There's other markets to trade. There's plenty of opportunities out there. You can actually see what we do in this group over here is that we specifically focus on getting funded accounts, right? So we're focusing on getting funding for equities, which means that you pay a small, at least a small fee to do the challenge, right? A challenge fee, a trial fee. If you pass the challenge, similar to Bitfunded, then ultimately you move through to the next round, you pass the next round, you get your funding, right? So this is what our traders have been doing, and Sing is taking you through the ebbs and the flows, right? So you can see over here, this one of our traders over here, 𝗕𝗀𝗀, he just got his funding, $50,000, right? Now he trades with the bank's money, if you will, other people's money, $50,000. So that is over here, 𝗕𝗀𝗀 saying thanks to Wall Street Sing over there. And I will remind you, for any of you, the offer still stands. I saw so many of you took the opportunity yesterday. Today is the last day. Today's the last day. For those of you that do want to jump into Whale Room, what we're doing is we're honoring what we said yesterday, which if you go through into Whale Room, maybe hardest if you can just put that same link that they can email for the giveaways. He'll add it into the stream right now, so you can just refresh in a few minutes. But join Whale Room, come through, email the giveaways email address that he's going to put in over there, and you'll get yourself a free Bitfunded account where you can also trade cryptos over there. So this gives you funding. We'll give you a free funded account for you to try out over there. All right, let's continue. DXY. Still hovering around that mid-range, right? Not much going on over here. It has taken out that low. This is definitely a full-on reversal, which creates for an interesting environment. So what I want to see over here is the next big spike up that comes into this 104, possibly 106 region to set in a lower high. Maybe that brings some liquidity into the market. What could save crypto? Maybe that's what you're wondering as well. What could save crypto? Well, ultimately, we need to move away from quantitative tightening, and eventually we'll start to move into quantitative easing. Right now, I think that's the only thing that will bring liquidity into the markets. But this is not just crypto dependent, right? As I'm sure you guys can see, this is more a macro thing that's going on, right? Equities are starting to create downtrends across the board. Warren Buffett, who they all insult over and over again as a dinosaur, nailed it once again, right? Surprise, surprise. Nailed it once again, 100% cash, I think. Or no, he's not 100% cash, but he has the biggest cash position he's ever had. I think it's like something like $300 billion or something. Anyway, let's have a look over here. Bitcoin dominance, still very strong. So if you are playing any crypto, I mean, the chart's there for your guidance. It's telling you Bitcoin is probably the only thing that you should be touching if you are even playing this market. Also has the highest liquidity for the short-term trades if you're just jumping in and out. I am interested in this 50% level. So let's see what happens. We're very, very close, right? Only 0.71% away from testing that level, and then we'll see if we get any kind of rejection. If we look at USDT dominance, this was the level to break down yesterday to get the markets to move back up. Failed to do that. It got very, very close. So I'm going to leave this line in the same place. We'll see if we start to create a rounded bottom. If we do, we'll line this up. Again, this chart moving up means Bitcoin cryptos go down. That is your major resistance level, right? I would say that crypto definitely puts in a huge bounce if this gets into the zone over here, which is going to be 6.2 to 6.4%. All right, volumes down across the board, views down across the board as well. Ties hand in hand with volumes, with the volume chart. Pure apathy within the markets, right? People are done. I don't know if they're going to get liquidated again, right? Remember, we kept seeing almost $1 billion day after day after day after day, showing the bulls' resilience and attempt to constantly buy the bottom, right? Buy the bottom every single day. And ultimately, now we're sitting here with the last 24 hours with only $253 million worth of liquidations, which is very, very, very low. One of the lowest that we've seen for a very, very long time. The last time that we saw that low was back in September, October. You can see over here. And then we went into a pretty volatile period over November, December, January, February, and even the beginning of March now. So that's what we have over there. Long to short ratio, more or less 50-50. So no real imbalances over there, but a big drop in the volume, right? And we can go to this chart, still in a downtrend, probably one of the most important charts, I believe, to look at as you watch price come down into key levels. If Bitcoin comes into the key levels that we've outlined, most notably $68,000 to $72,000, and we start to see price bouncing from there, followed by a big uptick over here in the daily exchange volume, that's probably a positive sign that maybe we are going to put in a serious move after that. So that's kind of the last hope, right? You hit those key levels, big shakeout, and start to put in a massive bounce. But as I've been saying, guys, at the end of the day, you need to be loyal to your capital. You can't sit maintaining a 100% exposure to the crypto markets in the hopes that this is just a shakeout. What if it's not? What if this is the start of a multi-year downtrend? I don't know. I don't think it is, but it could be. It could be, right? You can't trade this market off of feelings. You can't put your equity in the market based on what you feel may happen. You have to look at the evidence set before you. And if you're setting in a downtrend, well, you probably don't want to be maximally exposed. Fear and greed, right? Fear and greed in the 20 to 30 zone. That's what it looked like historically. You can see, the previous bear market, well, you were in that 20 to 30 almost all the way down, right? That's ultimately what it created. And this is what I said. This is contrary to popular belief. But being in greed helps to get the market going and keep the market in a strong trending move. And I said, when this was all happening previously, let's go back onto the 20s and the 30s, when we started to print this up here, near these highs, close to these highs. I said, to me, this is not really something optimistic. Like a lot of people want to see, the reset on the fear and greed. I said, I don't want to see a reset on the fear and greed. I want to see the market remain in greed and then push up into extreme greed, because that's where your tops get set in, right? Let's reset this once again, and let's look at 90 to 100. This is where 80 to 100, right? This is where your powerful trending moves occur within the market, is when the market is in extreme greed. So the fact that we've positioned and we're holding in this fearful zone, I mean, I don't view that as a positive sign, I must be honest, especially when we have the confirmation of a downtrend. That means we can remain like this for a very, very long time. It's all about the trend, right? All right, so let's continue. Same over here. We're waiting for the extension of this move to show that bears have run their course and we can get some relief. In order to determine when that happens, we're looking at the Bollinger Band with percentile running into the yellow box. We're not there yet. This chart is abysmal. It's telling us we are likely very, very soon dropping down into this lower region over here. And I guess that can keep that somewhat bullish structure alive with this beautiful parallel channel that you have testing the lower boundary, meets up with strong horizontal resistance. This is important, right? This is definitely an important zone. And to me, that's what the market's calling for. I don't want to see it drop below. If it's a wick or two below, that's fine. But as long as you're closing back above this region over here, I would still be somewhat optimistic that somehow something will change in the market fundamentally and bulls will turn this corner, right? Putting in a higher low, just like we saw previously over there. This is how it lines up with the macro, right? You got 1, 2, and this becomes your third macro high low if you can hold that level. So basically, you got to wait for the market to play into your hands, right? Don't chase it. Just wait for it to come to you. I'm waiting for it to come there. Either it comes there or it breaks above and holds here. So if I see this, great. Maybe I start to get long once again, and we say that was all a shakeout. It's either I get in here or I get in here. In between here, I do absolutely nothing and sit on my hands in a cash position, right? So that's what we're looking at over there. Let's continue. Still struggling with the massive amount of resistance from the volume profile over there. We spoke about this, the possibility of dropping down into the fair value gap. 72,010 is the level. That's pretty much the same thing as this zone over here, right? $72,010 is your next fair value gap, which is the inefficiency candle, which the market likes to rebalance, similar to gaps that you see in the stock market. I think fair value gaps are almost more reliable than CME gaps, right? So at least that's a bit of food for thought. Okay, well, below all the moving averages, this is getting really bearish. I actually want to see something over here. It's similar to what we saw over here. The one bullish thing that I could say is this, right? The one bullish thing I could say is at least the 200 MA and EMA are still angled towards the upside. Overall, they're still moving towards the upside, which means sometimes you can get these overextended sell-offs like what you're seeing now. You can see things like that, right? And then you somehow pull back above, which would be the equivalent of hitting that 68 to 72K region over there. If you hit that and you pull back above this, it can still keep those moving averages towards the upside, at which point this became a phenomenal buy the dip opportunity. But if you spend a lot of time underneath this, and these start to roll over, bad, very, very bad, then you can say probably we're in a bear market. So right now, in order for bulls to take back control in the short term, they do need to get, I think they are, yes, they're above the pivot level. Okay, we're above the pivot level for now. So that means your RSI is attempting to turn back towards the upside over here. We'll see if they can hold it there for some time. Again, just giving you an example. Maybe this time is similar to what we saw over here, because if you look at the posturing of the blue moving averages over there, the EMA 200 and the MA 200, it was very, very similar, right? You held below, shook some people out, reclaimed it, and then you led up for a pretty massive move. What you don't want to see is this. This is what bear markets are made of, right? If you start to cross all below, so if we take a massive drop now, right? Let's say prices hovering right now, somewhere around here, but the moving averages haven't dropped as hard yet. If that 9 and 18 exponential start dropping aggressively below the 200, and you start to get these kind of bearish crosses like that between the 200 MA and EMA, and price holds below, basically anything that bounces up into there, we become massive swing short traders, right? Then we're not looking to buy the dip anymore. Now we are looking to short with absolute size. So cool, we've got that there. Where are we now? Let's just give you the picture. So there it is. We're not there yet, right? Let's continue on with this story, right? What I just showed you, that 9 and 18, which is the yellow and the red EMA, it is coming down aggressively. You guys can see that, right? Which means if price does fall sharply from here into the 60s, then that is going to pull those through. And then that next bounce up is probably going to be exactly that, right? The death sentence. So we'll see. We'll cross that road when we get there. We're not there yet. If you do want to trade the markets in general, guys, I do want to remind you that Blowfin has a sign-up bonus where you can get up to $10,000. There's no KYC. To me, this is one of the safest exchanges to trade on because they have something called Fireblocks. Fireblocks means that a third party custodies their funds as opposed to the exchange, which means that there's no chance that they can go and trade with customer funds, right? It's a legitimate third party. It's called Fireblocks. That's how they store all the customer funds. And there's no KYC here, right? Which is amazing. It means that any of you anywhere in the world can trade here without giving up your birth certificate, passport, and your home address, right? Which I'm sure, I don't feel comfortable doing that. All right, cool. So we've got that done. Again, huge profits in the Discord. We are longing, we are shorting, we are doing every single trade out there. If you do want to join us and our members who are making massive profits, remember, we're doing the prop firm challenges there as well, passing those with you live. Then join into Whale Room. Let's just do a refresher. Did you get that in? Let's see if we got the link. Let's click over here. Do we have that link? Okay, so we have. Do you have it there yet, Hardis? I don't see it yet. Just put in the giveaways. I don't see the giveaways. Just put the giveaways underneath Whale Room, so that they can email there. If they join, they can obviously get that Bitfunded account for free. Now, with all of this being said, right, we do need to look for ways to make money. We need to still make sure that we make money. And there is opportunities, even within the crypto markets, to still make money, right? I told you yesterday that I'm busy creating these bots. So as promised, I'm going to deliver on those today. The bots allow you to make money both ways, right? Now, there's a couple of different things that could take place over here. I'm just going to explain the setup first to you, and then you can we can work from there, right? So I'll give you the bots in a minute, how you can join and get in. But essentially what we're looking at over here is, in order for the market to still somehow remain bullish, right? I would want to see price holding above this. Okay, I'm going to make it very, very simple, right? If price starts to fall into this region, sometimes you can get a capitulation style wick, which means that price will obviously come into this. And if you have multiple orders staggered within this zone, you obviously want to get as many of those filled as possible, right? So the bot essentially has created a grid between this region and current price action, right? That's the first thing. If it breaks below that level, then it's out. And it would need to be on a closing basis as well. Then you can say that it's over, right? But then we're also opening up a hedge position, which is going to be shorts, which is basically from here up to about this region over here. That's going to be building short trades over there. So essentially, it's your range, right? Long trades over here, short trades over here. But the beauty of the bot is that all the small, tiny on the lower time frame, right? Let's go back a step. Let's quickly mark those levels off for you. So we got that level, we got this level, and then we got the mid-range, right? With the mid-range, which is give or take there. Okay, now let's go on the 1 hour time frame. The beauty of the bot is that the way that the bot works, so focus on the yellow lines. What we'll do is we'll turn off the indicator over there, the yellow lines, excuse me, the white lines. So focus on the white lines over there. The beauty of the bot is that the bot will buy and sell incrementally and on a micro level, even during these little flows, right? So it's basically making you money both ways. There's a link in the description below. If you've already signed up to Pinex, then all you have to do is click that link to join the strategy. If you haven't yet signed up to Pinex, sign up first to claim your sign-up bonus, because they have a sign-up bonus. I also believe it's up to $10,000. Once you've signed up, you can come over here and you can click copy Kyle's hedge strategy, right? It's this one over here. Now, I have to just let you know, when it comes to the strategy, this is only, I'm going to give you 2 strategies, right? This strategy is only for those of you that have a bigger account size. Your minimum that you can enter into this hedge strategy, this is a hedge long and short, which means you're probably going to make money both ways, right? The minimum that you can put into this is $2,000. I recommend putting in at least $3,000, $2,000 in to copy the bot and add $1,000 of additional margin. Your liquidation levels, everything will be listed when you click copy the bot and you join. Everything will be listed over there for Pinex. Essentially, when I set up yesterday, I think your liquidation level on the long side would mean Bitcoin would need to come down to $6,700, which means we have much bigger problems on our hands if that happens anyway. So just so you know, that's assuming you only put in 2K. That's your liquidation level. If it goes to the upside, I think the liquidation level was something like your shorts would be liquidated at about $180,000. The thing is, we can make tweaks and we can adjust this bot, which we will do over time, right? We'll do this as the market progresses. But for now, this is one good way that you can at least get exposure to the market without sitting here day in and day out and being your head in with the ebbs and flows of the charts. And it will oscillate and make you money both ways, right? So that's that. I think this is a very safe exchange. I met with the team yesterday over here in Dubai. I think they're amazing people. And I think it's super safe, right? So again, you calculate your own risk management. That is that one. The next one, let's go to the next one, right? The next one, because that one's for, again, to be clear, for people with $2,000 or more. So if you want to join into that one, I think I put like 3,000 or 4,000 into mine. The other one that I want to have a look at is this, right? And it's Ethereum. So if we go to Ethereum, Ethereum is breaking down this key level. This is for people that have less money. If you have $250, you can join the ETH one. So I still believe that ETH is unlikely to go under $1,000. And therefore, we are building also some low leverage long positions within this range between $1,000 and $2,000. So within this current range over here, it's going to be building some long positions. But remember, the bots are very, very, very smart, right? It's not as simple. The bots are not as simple as just doing this. It doesn't work like this. Let me just throw this on. Where is our, there we go, grid. It's not as simple as just throwing in manual grids, right? These bots are essentially buying and selling on a micro level in between each of these grids, compounding your gains and reducing your risk, right? So for that one, we're looking to scale into ETH between these two levels. I think ETH could realistically drop to about 1.5. So I've given some extra room in case it goes all the way back down to the bottom of the range at $1,000. That would kind of be my worst case scenario. And then we'll see if there's reaccumulation within that range, and then some form of QE comes and the market moves back up, right? So in order to get that bot, go through over here and say, copy Kyle's ETH 3x strategy. Click on that one. But first sign up, right? Once you've signed up, you'll get the bot. And this is what it looks like, right? So this is one way that we can at least make some additional capital within the markets. Anyway, that's that. Let's continue. Also, maybe I should just mention why ETH, right? Why am I choosing ETH? I chose ETH and BTC. BTC obviously being the king. I chose ETH because ETH is literally going to, at some point, this thing's going to have a massive rebound, right? Even if it leads into a lower high, at some point, this thing is going to rebound in a big way. This is ETH BTC. It is coming down towards the lower region over here. There it is. So, I mean, how much worse can it get? Well, probably down to the zone. Okay, that's going to be another, give or take, 25% down, which is in alignment with our analysis on everything else that we're looking at, where we said alts could come down between 30 and 50%. So 20-ish% for ETH BTC because it's a larger cap. For some of the other alts, they're going to come down a lot more, right? There's, for example, Solana broke out of the bottom of the trading range. Ultimately, you probably have to look at Sol against BTC coming all the way down 50%. This thing's going to get hit hard. There will be bounces along the way, right? So if you are caught in positions, when you get that spike up, right, that bearish underside retest, that's your opportunity to exit those positions. You can look at a whole lot of them, right? If you look at it's just straight down trading, right? If you look at Aptos against BTC, specifically against BTC, these things are getting killed. Let's see, even Litecoin against BTC, we said this one was starting to round out over here, but look at that, straight back down. This just shows you the risk of playing these altcoins. One of the better looking charts, and by better, I don't mean it looks good, it just looks better than the rest, is SUI BTC, right? Coming straight into that mid-range. We'll see if it can hold this level or not, or if it's going to break straight through and move all the way back down to the bottom of the range. So at least in my experience, when it comes to altcoin trading, you want to be holding this for short periods of time and then immediately moving straight back into either Bitcoin or USDT. You don't want to be holding these things long-term. They almost always revert back to zero, which is what the chart tells you, right? AVAX against BTC straight down, right? Injective against BTC straight back down to the lows. NEAR against BTC, all-time lows. Cake against BTC, pretty much all-time lows. DOT against BTC, all-time lows. Atom against BTC, all-time lows. Cardano against BTC, held the bottom of the range, spiked up. I think it's probably going to still sweep below that 500 Satoshis below the white line. Casper against BTC, what once was phenomenal and outperforming BTC, strong, powerful downtrend. Absolutely getting obliterated. Say against BTC, almost about to make new all-time lows. What else? Arbitrum against BTC, new all-time lows. Optimism BTC, all-time lows. Stacks BTC, all-time lows. Ondo BTC. This one's still holding up somewhat, but again, what I say, you want to hold these things for short periods of time, not long periods of time. It's probably going to go to new all-time lows. If you made a lot of money on Mantra, I would take those profits straight into BTC or into USDT, because this will be no different. This has been the best performing chart, I think, of this crypto cycle measured against Bitcoin. And I can guarantee you it's going to come to all-time lows at some point, right? All-time lows on this one. Dusk, okay. Yeah, all-time lows. It's brutal. It's really, really brutal out there. I mean, I'm not going to keep going. Let's see one more. Ape against BTC. This is the project that was like involved with that Hugo Labs, killed as well. So the gaming sector will be obliterated, right? You can look at any of these, even super farm against BTC. I-rate is going to take out these lows, which is 227. So let that be a lesson. Do not hold altcoins for prolonged periods of time. What about Rune against BTC? This one's also marking down. It's not at all-time lows yet, but realistically, it's probably going to get there. Cool. Let's see. Anything else? What about WIF BTC? Look at that strong, powerful downtrend. 𝗪𝗡 against BTC, new all-time lows. Terrible, right? Terrible stuff. Okay. What else, guys? We can have a look at some of the other coins on the USD pairs if you do want. Just checking everything out. Look, this is the type of stuff that will wreck you. 𝗧𝗪𝗠19, too much bullish news in America for this to be over. That is a sign of the times, right? You get signs and symptoms of market cycle tops and bottoms when it couldn't seem like it should be more bullish, and it leaves people perplexed at why we're not going higher. The inability for price to move higher off of good news is quite literally the definition that you're in a bearish market. Call it a bear market or just a temporary bearish market, but we're in a very bearish market. CPI came out better than expectation. No movement from price. I mean, what more do you want? Donald Trump signed an executive order to hold Bitcoin, right? I mean, what more do you want? Do you want aliens to come to Earth and say they're adopting interplanetary Bitcoin transactions? There is no more bullish case. The most bullish thing that could happen now is, I guess, if we do get some form of QE, right? Because that's straight liquidity. There's a chart that we brought up. I'll try to find it again for the next stream, looking specifically at it was the M2 money supply measured against global liquidity, I think it was. And what we wanted that chart to do, which that chart is downtrending, right? We want that chart to change trend and start to aggressively move up. When M2 outperforms the global liquidity, usually there's the spillover effect, right? Think of it like, how are we going to draw this? A cup, right? Let's say there's a cup over there, nice little cup, steaming coffee coming out. There we go. This is what we've resorted to, guys. This is artwork on the street. When that M2 is moving up so quickly that it's outperforming the global liquidity index, then there's a spillover effect, right? So much coffee, everybody bring your coffee cups because there's going to be a spillover effect. We want to fill your coffee cup as well. That's where you see the altcoins run, and we haven't got to that yet, right? Right now, that chart is still in a downtrend. I'll try to find that chart for next time. I can't remember the exact, at least ticker thing that I have to type in over there to get that. Okay, we haven't got to that. We haven't got to that yet, right? Okay, time for the bull moon. The bull moon is coming, but I also heard it's something about a blood red moon or something. I don't know what that means. Again, I'm not into these moon things, but absolutely that is the case. But again, guys, I did tell you there's a possibility that equities bounce hard and that will take crypto with it. And that could lead to huge, enormous bounces for crypto. So if you do get that bull moon and you move back up over here into like this 94.5K region off of that bull moon, which is coming now at the end of this week, I think it's tomorrow or the next day. But if it leads into an underside retest and a lower high, that's your opportunity to get out, right? If it reclaims, this changes the picture. If you reclaim and you hold back inside, that becomes bullish, right? Then we can look at high prices. Look, there's still some hopium. The hopium is that the weekly RSI, so let's quickly turn this off. The little bit of hopium that's left is, let's go on the weekly, and let's just reset this. The hopium is this zone over here. Okay, there we have it. This zone, if it holds, has bounced price, I believe, every single time. So let's have a look. So you need to look on the weekly scale, and we'll mark that off when that happened. Let's turn off some of these indicators over here so we don't have too much mess. There we go. There we go. And let's take our vertical lines and lock that on. So the last times that we saw that, you can see that RSI, there it was, right? RSI in the bottom. There was price. You got the move up, right? RSI held that zone. Where did price go? Up. And now the RSI is back in that zone. So this is your bit of hopium, right? I'll just expand this and zoom in. And let's lift this. There we go. So if we can hold the gray box on the weekly RSI, you know, this is where some of the bottoms were found, but it takes a bit of time. Let's look at the next one. This one, it also took a bit of time, right? How long did this take? Let's actually see. So that was essentially 35 days, 5 weeks, right? How long did this one take? That was 9 weeks or 63 days. And how long is the one that we're into now? 2 weeks. So you see what I mean? You can hold into, if the RSI can keep defending this level and Bitcoin can drop down to $68,000 to $72,000, that could be a really, really nice opportunity to pick some Bitcoin up, at least for the bounce. And then if that bounce leads into a lower high, we out. If not, maybe the bounce leads into a full-on swing trade like it did over here, right? Like this. Up, test, up. Maybe we get one more of those and up, and we finish the cycle. So again, this is essentially why we're running 2 strategies over here, right? Hedge strategy. We're going to make money both ways no matter what. This accumulates for you over time. Remember, use the link in the description below. Sign up to Pinex over there. And then I also want to remind you, if you do want to join our funded traders over here who are passing their funding with Trader Singh in the whale room, then you can also get a bit funded with that. Then you can trade both challenges, equities and crypto. So that's it from me, guys. I won't see you tomorrow. I will be traveling. I'm going to be on a plane, just to let you know, which means I also won't see you on Saturday. I will see you again on Monday. So don't break things while I'm gone. I'll be up to date in the Discord as well, Whale Room Discord, and on Twitter. Follow me on Twitter. The links are below. And I'll see you all on the next one. Have a great day and cheers for now.